What if I told you you can access up to $1 million in business funding whenever you need it to scale and grow your business faster? Most small businesses fail because of one thing: cash flow. But you don't need a massive loan to stay afloat or scale your business. A business line of credit gives you access to funding whenever you need it without having to take on unnecessary additional debt. I've helped hundreds of businesses secure the funding they need to grow, and today I'm going to break down what a business line of credit is, how to get approved, and the smartest ways to use it to grow your business. A business line of credit, or LOC, is like a credit card for your business, only with way more flexibility. Here's how it works. Instead of receiving a lump sum like a traditional loan, you get access to a credit limit. Say $50,000. You only borrow what you need when you need it. You only pay interest on the amount you use, not the total credit limit. Once you repay what you borrowed, the funds become available again, just like a credit card. And the earlier you pay back what you borrowed, the less interest you pay on most lines of credit. A line of credit gives you access to working capital on demand, meaning you can cover unexpected expenses, manage cash flow gaps, or take advantage of new opportunities without having to apply for a new loan every single time. Now, the smartest ways business owners use a LOC are for 1. Cash flow management. If your revenue is seasonal or clients take too long to pay invoices. Obviously, you have expenses that you need to cover. A line of credit is perfect for that. 2. Unexpected expenses like equipment breaking down or emergency repairs. Then there's inventory and bulk purchases from vendors, marketing and expansion, as well as payroll and staffing. Now, let's talk about what lenders are looking for when you apply for a line of credit, because banks won't hand out money to everyone. Here's what they want to see. They want to look at your business revenue and see that it's good enough to handle payments. Be ready to show your last 4 months of business bank statements, and for anything over $100,000, they may ask you for tax returns, financial statements like a profit and loss, accounts receivable aging report, or a business license. Any lender will also need a standard credit application. Credit score is really important too. They want to see a personal score of at least 650. It gives you a much better odds of approval. If your score is lower than that, there are other options, and we can work you into a line of credit. Time in business. Most lenders want you to be in business at least a year for a traditional line. If you have less time in business, then you can still access things like 0% APR business and personal credit cards, which are similar to a business line of credit, but they're based more on your personal score than your business's revenue. Last but not least, collateral versus unsecured LOCs. Some lines of credit are secured by collateral, like accounts receivables, inventory, or equipment. But most lines of credit are unsecured lines that don't require collateral. Here's a quick tip. If your credit isn't great or your business is new, consider working with a business lending consultant like me to find alternative lenders who offer more flexible options. Now that you know what it takes to qualify, where should you apply? There's traditional banks, best for low interest rates, but they require strong financials and a long business history, and they might take forever. Then there's online lenders, much faster approvals with less paperwork, but you should expect higher interest rates. There's also credit unions, more personalized service, and sometimes lower fees than banks. If you've got a good relationship with a credit union, that's good. Then there's fintech platforms. There are companies like Bluevine and Fundbox that specialize in fast, unsecured lines of credit for businesses. Here's a pro tip. Compare multiple lenders to find the best rates and terms. And if you need help, I've got connections with hundreds of lenders that approve lines of credit faster than banks. So hit me up. A line of credit is a powerful tool, but only if you use it wisely. Avoid making these mistakes: maxing it out and only making minimum payments. Treat it as a safety net, not free cash, because remember, the earlier you pay it back, the more interest you save. Using it for long-term debt. If you need funding for big projects, a term loan or an SBA loan is a much better option. Ignoring the fine print. Look for hidden fees, interest rate changes, and repayment terms before signing the agreements. Using your LOC responsibly will help keep your business strong and your borrowing power high. Now you know exactly how business lines of credit work, how to qualify, and how to use them wisely. If you're ready to grow your business to new heights through funding, click the first link in the description. Thanks for watching. I'll see you in the next one.